Good evening. This is Ken Long from Tortoise Capital with the review of the trade of the day for February 25th, 2013. We're going to take a look at a series of three volatility trades, and one of them short volatility XIV, and then two that are long. And I want to just draw your attention to this YouTube video here. That's from our weekend report review. That's a 10-minute discussion, as it says here, of the weekend report that described our interest in the volatility trade in VXX and therefore UVXY, and by extension XIV on this trade, because that's the inverse volatility trade. And so this is 3-minute charts, and this is different than my usual markup. I'm experimenting with freestockcharts.com. I really like the way they set up, but the color schemes are just a little bit different. So I've marked my entry here with a yellow circle. It's easier to read than the green. So this is the opening of the day, and there was a big gap up in XIV. That's the inverse volatility. Gapped up, sold off a little bit, finds support here, and then starts taking off. We get an entry at 23. Even with an initial stop of 0.15 just below the low of the day, reasoning that if we get this large of a gap up, we may actually see some continuation. And so the indicators you can see here are 3-minute bars. The river is this gray, light gray area, with the red line in the middle being the Bollinger Band mean. And the floodplain, you can see it, that's plus or minus 2 standard deviations here and here. The light aqua is the 10-period regression line. The white is the 30-period regression line. The Bollinger Band 2 is this orange ribbon still. So that much remains the same. So we get an entry here at 23 even with an initial stop at 0.15. And over about the next 15 or 20 minutes, it moves out to 23.24. So that puts us at about 1.5R in hand, and we've, we adjust our stop here. So after about 10 minutes, we're at break even on this particular trade. And so everything is moving out nicely in the morning. And then shortly thereafter, price actually gets all the way up to about 23.35, then rolls over. We get a regression line crossover here, and we're exiting as price is entering the river. And so we get our exit around 23.20 with a little slippage. And so the initial trade is from 23 to 23.20, and that's about 1.25 R on this initial trade in the morning. Now, I had some work to do elsewhere this morning, so I wasn't able to play the reverse side, and that's the cost of multitasking. And that is this trade here on the inverse is where I would normally be trading the stop and reverse, and that is a regression line crossover and then price leaving the river. Normally I'd be looking to go short right about here, or in this case taking VXX or UVXY long with a stop just around the Bollinger Band. So about in this case about 20 cents worth of initial stop, and then that's a $1 move. So that's a potential 5R move down here. And I want you to notice how price remains inside the floodplain. It never even really threatens the Bollinger Band mean. And then we get a regression line crossover down here, finds support, re-enters the river, and that would be sort of a down leg. And upon price re-entering the river the second time, after the regression line crossover, you can see that there's a potential entry somewhere in here with a stop below the low of the day near the yellow line. And then there's a trade to the Bollinger Band mean and beyond. So there was something available in here. I came back from my meeting in time to be able to observe this, and then failure on the far side of the river, and then we'll see in a minute here the UVXY trade. So this one worked out to be about 1.25 R. There was a potential of about 5 or 7 R in here, depending how efficiently we trade that. And then we're going to shift over to look at UVXY now, right around this time. And so in UVXY on the first trade, notice the sideways quiet channel here. We have a narrow Bollinger Band. The slope of the Bollinger Band mean is about 0, so it's flat. and then the price and both regression lines are inside that narrow channel. That's the working definition of sideways quiet channel. We buy the ribbon breaking out of that channel and get our entry at 1060 with about a 20-cent initial stop here. This one rides up, and then we get the regression line 30 leaves the river here. That's the beginning of trending behavior on the upside. Notice the slope of the Bollinger Band mean starting to work, and then the river slightly getting wider as it accelerates north. It gets up to 11 and then starts pulling back. When the price and the ribbon cross the 30 period, I decide to get out because I can see the regression line crossover signal starting to appear, and so we get the exit at 1080, and that's 1R in the bank. And now I'm watching to see what's price going to do with respect to the Bollinger Band mean. And here price re-enters the river, doesn't even get to the Bollinger Band mean, starts taking off again, so we buy the next breakout at 1080. So really we just were standing aside in the market right about here. And the 30 period regression line never even really budged. It just kind of went flat. So really once price leaves the river again, it's looking like a resumption of trending behavior. And so we get our first entry at 1080. We get a nice initial move, comes back and just touches the edge of the river and continues. Now right around here at 1120, we add a second position. Why? Because we've got 2R in hand. We've got momentum working in our favor. It's cleared this previous swing high up around 1105-ish. And so we put that second trade in at 1120 with an initial stop of 0.2. And now it really takes off on 2. Gets up here to 1150. It goes sideways, never even really threatens to retrace. And then after 6 or 8 minutes, it resumes again. So we add a third position at 1160, again with a 20-cent stop. And we're managing our stops all along the way. And then it just takes off and runs amok in this half-hour period and gets all the way up to almost like 1250. And then right around here, we're about 15 minutes out from the close, and I just can't take it anymore, so I exit everything at 1240. And then when the smoke clears and I count it up, by my math, it's about 20R. So that's pretty much a whale of a move. And that's the kind of a move that's available in volatility when it's balanced, when the market is balanced on a knife edge, right there where there's almost an equally strong case to be made for this to be buy on dip and resume and go north, or a surprise move to the downside that will run a bunch of people's stops for profit preservation. You can get these kinds of rapidly expanding moves in volatility. And I don't carry anything overnight on this because you saw from the XIV trade just how volatile it can be around the gap, and tomorrow's another day. So this is just a case here where sideways quiet channel. We started off the day trading the lack of volatility and banked an R.25, and then the market sort of reverses. We get that sideways quiet channel and starts volatility starts expanding. At this time, the SPY was starting to collapse and all the prime indexes were collapsing as volatility is running up, and then they really made a negative run in the indexes while volatility is expanding. So when the whole market is shaken down like that or failing, VXX or UVXY is an interesting intraday play. So there's 20R and then 1R and then 1.25 from the morning, so a pretty good day at work. This one actually traded up as high as 1275, so there's another 3 to 5R still left on the table. But again, who's greedy or who's counting? So that's Ken Long from Tortoise Capital with the trade of the day. That will probably be the trade of the week. All things considered. These don't happen all that often, but when they do, it's nice to have a methodology that allows us to routinely be exposed to it and then be surprised into those great big moving positions. Every time that I'm entering here in these green circles, I'm really expecting that to be the top, and I'm simply worried about managing my stops properly in here and let the price just go as far as it wants to go. And as long as I'm managing my stops, and I feel pretty good about trading technique here. Just pay attention to my own knitting, if you will. So thanks for your kind attention. This is Ken Long from Tortoise Capital. Good trading. Keep your powder dry and your risk managed.